Well, hello there, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective, and that means each time we're looking at these charts, we're looking at supply and demand, we're asking ourselves, what happened today? What does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursday, broadcast at before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. Anytime I push public content, you'll get a notification. As far as what happened today, it was a down day. We're still gyrating, folks, back and forth. Question in people's mind is, is this going to get bad? I mean, we are in September, actually the last session of September tomorrow. Then we go into the big bad October. Fear is in the air. People are a little worried about what's happening, not just here, but primarily in Europe. We see some more selling take place in Europe today. I suspect they're going to be down more tomorrow. We have banking sector woes over there again, scaring people, and definitely scared us down 1.5%, anywhere from 1 to 1.5% on our markets. All up again today. Gold and silver couldn't get it going. Dollar did work a little bit higher, nothing big, but that's kind of a landscape of what we're working with. If we go look at the charts themselves, I'm going to start with the general market. So let me bring up the S&P 500. Now, I'm doing this show early again this evening. I'm not going to be on air later. So let's pick it up with what we have. We don't have volumes. We can look at the ETFs to get the volumes. Volumes were not that heavy, a little bit heavier than they have been, but not that heavy. Let me just pop over and show you the SPY. There's a little bit of a pickup there, but compare it back to the kind of allocations you got back here in terms of numbers, and that's because you're in the range, right? When you're in a range, right? When you fall out of a range, like this is falling out of a range, right? Then you can get a big escalation. You hit a bunch of stops, you blow people out. You're in the range again, right? This is the range. And so, things inside here aren't going to get huge volume pickups. And so that's why you're seeing what you're seeing there. And that's going to be true across all of these. Let's go back to the S&P itself. And if we look at it, what do we got going on here? Now, the big thing on the S&P has been still is this big volume bar. That was the triple witching or quadruple witching, actually. And what do they do today? They come into it again. They've done it 2 or 3 times now. They come into it again. What happens? Sellers walk away again. And so each time this happens, and if you look at it from this perspective, you just draw the line up here and you draw the line across the bottom, where is that? Well, it's about halfway down. That's a lot of times what happens. And so that becomes a key bar. That bar so far has been propping prices up. As we come into the weekend, people are going to be a little bit worried about what's going on in Europe if that seems to escalate overnight and tomorrow. And if that's the case, we're going to get pressure down here to try to break this down tomorrow and get down to the bottoms again. That's the potential bad side. The good side is that if they can't do that, what are they going to do? They're going to flip this thing around, right? They're going to hold this area and they're going to flip it around. They're going to go right back up here and test this top. And so tomorrow, kind of a big day in terms of, are you going down here or are you going to hang out up here at the highs? We can't really tell just looking at this chart. And why I say that is, I can make an argument both ways. And when you can make an argument both ways, then you got to say, hey, I can't tell you from that chart. Then you really have to focus on other things to see if they tell you something. The strongest index has been, still is the NDX, right? And today you had the SOX pushing higher on NXP, getting potentially taken out by Qualcomm, got a big boost in the SOX. What did this do? Came down, did a retest, and is attempting to regenerate one more time. That's on NASDAQ on the daily charts. I haven't shown it, but if you pull the weekly charts over, these are still fairly bullish. I mean, there's nothing bearish about these charts. You got a good amount of work going on to the upside. So I don't see anything negative about that. If I look at the broader NASDAQ itself, same thing. Bring this over. Look at the weekly there. This is pretty positive, right? You came back into this swing point high. There's the test and trying to regenerate to the top side. So it's a little hard to get extremely negative here. And I know a lot of people want to be fearful and all that. But, at this point, I think this is normal gyrations. People trying to figure out where their money should be, how to get it there, how much risk to take, so forth and so on. Russell, pretty weak on the day. of bearish engulfing. We've had bullish engulfings, we had bearish engulfings. Right now, a bearish engulfing this evening. What I want to do is I want to ask myself, okay, if we've got all this risk, right? If people are really worried, I would think, in terms of the banking sector in Europe, which is really the focal point today again, and it was earlier this week, I would think that we're going to see sell-offs in bonds. In other words, we're going to see fear. Yeah, you get some fear going to bonds, but if it's really systemic in terms of, like a Lehman moment, these guys are going to get whacked as well, especially corporate debts and things of that nature. So if I pop through these bonds, you can read the tops up here. Here's an aggregate bond on the U.S. bonds, Vanguard total bond market. If we keep going down here, you're going to get international bonds. Those don't look like they're under stress. If I look at the emerging markets, yeah, we got a bearish engulfing there, but still, it's in a big range. If you pull over to weekly and look at it, that doesn't look like a lot of stress yet. And if you just flip through all these, right, high yields, they don't seem to have it. Here's the corporates, they don't seem to have it. And when I say don't seem to have it, they don't seem to have fear. And if you just flip through them all, I don't see fear coming into the bonds, folks. The treasuries themselves certainly not showing it. But if I go in here, like here's junk bonds. Look at these, right? That's on the daily. Look at the weekly. That doesn't look like fear to me. So if we're really going to get a Lehman moment right now, the bonds sure aren't telling us. And usually the bond guys know a lot more than we do. And so when I look over there, I don't see the fear. I think what we have is just more gyrations, more concerns, end-of-month concerns, end-of-week concerns. I think the window dressing's already done. You usually do that 2-3 days ahead of time, not the last day, so that's probably not going to help them tomorrow. It really just depends on what happens with Deutsche Bank and any of the other banking issues in Europe. Are we going to see more pressure there or not tomorrow? If we do, we're probably going to be under pressure again. If we don't, right back the other way. And I think eventually, as I've said before, this market probably resolves in the direction of the general trend. And what is that? That's up still. I don't see any difference there yet. Have yourself a great night. Take care, and I'll see you next time. Good night.